So EIC analysis. EIC means economy, industry, and company. When I say economy, that means I'm looking into the macros. Macros like demand supply, and macros like your GDP, NNP. These are the kind of components which I'm going to check into. So I'm going to get into gross data profit, how the country is performing in that particular area. And then there are microeconomic things which are also done. Industry-wise, we are going to get into some of this macro and microeconomic study also, because that is part of important part of decision making. When you finally want to get the decision, it's just not fundamental analysis that I'm going to take decisions on. Industry-wise, I'm going to do the SWOT analysis: strengths, weaknesses, opportunities, threats. Very important. If you don't do that, you are landing yourself into a decision making only on the fundamentals, means that you have not seen history in totality. You have not seen, you have just not gone into understanding a weakness of a particular sector. You have not gone into understanding the strength of the sector and what are the opportunities for your company to get it. So that industry will have different opportunities. There is something called as a CAGR, which is the growth rate of a particular industry. It's very much important for us to understand, with after analyzing SWOT, BCG, Porter, PEST, these models, that okay, what would be our kind of what do you say, the outlook in terms of the industry performances. And the CAGR, if you see every report, if you go to any report of marketing research of a particular sector, you'll find the CAGR being discussed a lot. And this CAGR, that number is used in fundamental analysis while discussing on the growth part of it. CAGR is connected with the growth component of the fundamental. So coming to the company analysis, there are two types, again, fundamental and technical. Under fundamental, you go into valuation. As I showed you, that valuation is is brought in to the net worth. As we go ahead, I'll discuss the valuation model. And then there is a growth. Growth is basically the income statement, where you see the growth happening on a year-on-year basis. So we will do analysis of the income, how they are increasing. And this growth is connected directly with your CAGR, how the growth, plus other parameters of the company, which is related to the risk factors into the company. What are these kind of two types of risks which are there? One is called as a systematic risk, which is within the system. And second one is going to be called as the unsystematic risk, which is because of this economy and industry outside, which is not under the control of our company. So during the company analysis. So a value can be either overvalued or undervalued or at the market value. So the fundamental analysis actually talks about getting into whether a company is overvalued or undervalued, and your decision is based on where you should invest. Based on, if it is overvalued, you should pull out of it. If it's undervalued, you may think of putting money into it. Because someday or the other, if you take the contrarian step, contrarian position, then you may gain windfall out there. So many investors go ahead and do kind of what you say as putting into undervalued stock. Now, I can give you an example that there's something called as in bonds also, there's something called as junk bonds. Indian bonds, sometimes they are also classified as junk bonds. When you say junk bond, means that they can give windfall returns. Though they are classified junk, but if you really see some of the investment investors or investment in financial institutes, they invest in junk bonds also. And that is really kind of a position many of the fund managers also should think of taking in those kind of calls. So a good fund manager is going to look in both sides, the negative as well as positive side. Positive meaning that, okay, I'm already, the herd is going in one direction, let me take the decision in that direction and make money. But there are good investors who look into that. What are the fundamentals? The fundamentals are saying something different from what the market is saying. So why should I go behind the herd? Let me take the opposite direction and stay at that position for a certain point of time, because for sure, I know that yes, this market is going to turn over. And that's where you can make money. Technical as it is, there are two ways of looking into the trend charts and the indicators which are there. So I'm not going to get into technical. I'm going to get into more of fundamental, so that we are very sure that yes, the decision is close to what is that is the plan versus actual is very minuscule. The difference is very minuscule.